Good morning, Katlego. It's nice to be here with you today. Today we'll be chatting a little bit about something that has been in the news and in the headlines for quite some time, and it is affecting our clients that are in retirement funds. So we will be chatting about the two-pot system and just how that will be affecting clients and what it is about. So Katlego, would you mind giving us a little bit of background as to why we're seeing these changes in the regulations?
Hi, Stini. Sure. Yeah, nice to be here with you as well. Stini, the reasons are it's really twofold. So the first being to allow members to access a portion of their retirement funds. This primarily was a problem. If you remember when we had the COVID-19 pandemic, people had money in retirement funds. They were financially stranded but couldn't access the money. So the government thought, well, it's a good idea to allow people to have access to some of the money in their retirement funds. But I think the biggest reason, Stini, is to encourage people to preserve capital for retirement. Currently, we sit with a big issue in that people literally resign and leave their jobs and then use up their retirement funds. This then in turn means when they reach retirement, they have nothing left in retirement savings. So this is really also just to encourage preservation, to keep capital for retirement so that when the person eventually retires, they have some level of savings for to fund their retirement. Um, in terms of, can you tell us more about when these changes are going to be effective, Stini, and what is going to happen to the members' existing retirement fund savings?
So this has now been signed into law, and the changes will be from effect the 1st of September 2024. So about a month or so, these changes will take effect. How it will affect current retirement fund members is that whatever has been accumulated in your retirement fund up to the 31st of August of this year will go into what is called the vested pot or the vested component. This vested pot will keep the current retirement rules that is ruling this investment as is currently. So that means that the two-pot system won't affect this vested pot. And at retirement, you'll still be able to take 1/3 of that vested pot as a cash lump sum, subject to the tax tables, of course, and then the other 2/3 needs to be used to buy a living or a life or a guaranteed annuity. What is also needed is that from the 1st of September, there will be two additional pots, Kat, that you will speak about. One of those is the savings pot, but there will be no funds in that on the 1st of September. So what will happen is that funds will need to be seeded to the savings pot on the 1st of September, and this will be funded from your vested pot. This will be a once-off transaction to fund the saving pot, and the amount will be 10% of the market value of your vested pot up to a maximum of 30,000 Rand. So the maximum you can have in that savings pot will be 30,000 Rand. And again, this is a once-off transaction. You won't be able to make further transfers from your vested pot into your savings pot at a later stage. Kat, so maybe you can tell us a little bit more about the savings pot and then the other pot, which is the retirement pot.
Of course. Yeah, I think before I get into the two new components or the two new pots that are coming through, I think quite a relief to hear that for existing savings or existing retirement capital, the existing rules remain. Because I've heard that a lot of people are now resigning before 1st of September to get access to their money. I think just a reminder out there to everyone that no need to panic. The existing rules that currently governs whatever retirement fund you have in place will remain the same on that money. The changes is really coming in on the contributions from the 1st of September going forward. So what are those changes? There are going to be two pots or two components. One will be the savings pot, where 1/3 of your contributions going forward is going to be allocated to the savings pot. So this is really the component that will allow members to access a withdrawal once per tax year. There is a minimum amount that you should withdraw if you want to, of 2,000 Rand. However, there's no maximum. You spoke earlier about the seeding capital, which will be maxed at 30,000 Rand. So, as an example, a member will be able to take the full 30,000 Rand as at 1st of September, limited to the 10%, of course. So, not everybody's going to have 30,000 Rand. So, it's 30,000 Rand, 10%, limited at 30,000, sorry. Yes, that's the savings pot. And then the next component would be the retirement pot. So I think the name says it all. So this is really the component that's intended to preserve members' capital until retirement. So no withdrawals will be allowed from there. Members will have to keep that money until retirement. And this is where 2/3 of their contributions going forward will be invested. So, yes, Dini, in summary, that's basically the savings pot and the retirement pot, one for excess to allow members flexibility, and the other to preserve capital for retirement.
Thank you, Katlego. And maybe just to touch a little bit more on the withdrawals from the savings pot, that will be taxed at your marginal tax rate. So the higher you are in the tax brackets, the more you will be penalized for taking these withdrawals. So that will be taxed at your marginal tax rate, and the tax will be deducted from the payment before it is paid out to you. So you will receive an after-tax payment. And whatever is left in the savings pot at retirement, you will also be able to take in cash at that stage should you want to. You don't have to take everything, but if you do have savings left in the savings pot, which ideally you want, you will be able to take that as a lump sum, and that will then not be taxed at the marginal tax rate at retirement, but at the retirement lump sum tax tables.
That's correct, Stini. And then just to move forward, Stini, just to get your understanding. So, how will these funds be invested in the savings pot and the retirement pot?
So I think there was quite a bit of uncertainty because the savings pot almost sound like a short-term kind of vehicle. But I think it's important to remember that although we have these different components, the vested pot, the savings pot, and the retirement pot, they all still form part of your total retirement fund, and they will still be invested. So your savings pot won't be sitting in cash. It will be invested the same as the other two pots. So you will be in the market and still receiving that growth on those funds.
Oh, great. That's good to hear. Because I think a lot of people, as you said, were concerned that their savings will now go into cash. And then just another question I have for you, Stini, is um, what's what's the implications of accessing one's retirement funds early? So what's the implications of taking money from your retirement savings?
So I think there's a few things that we can look at. Firstly, some of the platforms have confirmed that there might be an administration fee to process these withdrawals. We don't have the specifics from all the platforms as yet, and I'm sure from September that information will come through, but that is something to keep in mind, that there might be a cost to withdraw from your savings pot. Secondly, then the tax that we spoke about, it is taxed at your marginal rate, so that can be quite high, and you will lose out a big chunk of that capital that you will have to pay over to SARS. And then lastly, and I think the biggest, is that you are now taking from funds that are supposed to be for your retirement. So what you will end up with at retirement will now be smaller, and you're losing out on compounded growth over the years up to retirement. That's also tax-free, because remember, we're not paying income or capital gains tax inside of your retirement annuity. So it's compounded tax-free growth that you are losing out of. And that will have a big impact the more you withdraw from these funds. So ideally, you don't want to be withdrawing often from these funds.
No, I agree. I definitely agree with you, Steny. And then we've also heard that the retirement fund administration industry is anticipating quite a huge number of withdrawals come 1st of September. Just to get your sense of what we know, how long will it take for a withdrawal to be processed?
So again, we don't have the specific detail as yet, but what we do know is that this is a major change within the industry, and the platforms also have to make a lot of changes to their platform and their tech availability. So there's a lot of work going into this to be ready on the 1st of September from the platform side, but as well as from SARS side, because the platform will have to apply for a tax directive from SARS to know how much tax to deduct from these withdrawals. So we also at the hands of SARS on these tax directives before the platform will be able to pay out these withdrawals. So a lot of parties involved. And as you say, the expectation is that there might be a lot of withdrawals comes 1st of September. So I think we'll have to be cautious and have to have some patience. It may take a while, and we don't have specifics yet. But I think the platforms and SARS might be a little bit overwhelmed once clients have access to these funds.
I know. I can imagine. Yeah, it's going to take quite some time to get the first batch through. So in conclusion, Steny, I think really the message is yes, there are changes coming through. It doesn't necessarily mean that because you now have access to take a portion of your retirement savings, one should do that. Ideally, the best thing to do is to speak to your financial planner and look how these changes impact your plan and your individual circumstances to really make a decision that's suitable for your needs and your circumstances. Any closing thoughts from your side, Steny?
Yes, I agree. I think these changes, the idea behind it is for the better and to really preserve retirement funds. But we do have to be cautious when we do have access to these funds now, and then to remember to have our other things in place like emergency funds and other discretionary funds, because ideally that will still be the first place that we go to when we need money in financial stress. But thank you very much for your time, Katlego. Appreciate it. And as you say, please reach out to your financial planner if you have any other questions or any uncertainties.